Hey guys, so right now I'm looking at the chart for Injective. The ticker for this is INJ, and I'm currently on the weekly time frame. Now, before I get started, I should mention that if you're not subscribed and you want to get updates in the future, because I'm going to do about 2 to 3 analysis videos every single day, just subscribe, hit the bell, and then click on all, because if you don't, when you click away, this channel might be hard to find again because it's very new. We have a very low subscriber count, and because of that, when you search for a coin, we don't really come up in the top of the results. Okay, so Injective looks like it's further along than a lot of the other coins that I've been looking at. As you can see, we've already had quite a big breakout. We kind of had like a double bottom down here. We broke out already. Basically, if you want to trade Injective, I recommend that you draw these horizontal trend lines. So these are very significant levels. So you see the price came down here, and then we bounced off of this level. And then when we came up, it served as a level of resistance. So if the price makes its way back down, we can anticipate that this will be a level of support. Basically, support flips into resistance, and then once that breaks, it'll flip back into support if it's tested again. Okay, and that level is just above this candle body here on this doji candle. So I have it at $4.29. Okay, yeah, I think that's a good place to draw it. Okay, the next trend line I would suggest you draw is right here. You see how it was support here, and then it was resistance right here, and now it's serving as a support. This level is around $7.84. And finally, the other trend line I suggest you draw is right up here, basically at the top of these two candle bodies. And then you'll see this served as a level of resistance again right here and again right here. So that's basically the level of resistance we're currently fighting against, and that is around $9.42. And obviously, I suppose you could draw, I mean, might as well draw it horizontal line just at the top of these candle bodies right here, right? And then if you want confirmation that, for example, this level is going to hold as a resistance, because you're drawing this resistance line on a weekly time frame, you want to wait for the weekly candle to close to confirm a breakout, right? Because it's very possible if you're looking at the daily, it'll look like the daily candle closes above it, but if it's drawn on a weekly, you want to make sure the weekly candle closes above it as well. That will confirm the breakout. Okay, so what I'm seeing here, I'm going to switch to a smaller time frame. Let's take a look at the daily. And as you can see here, basically what we're forming here is, it's called an ascending triangle, right? So you have, here, I'll show you in Google here. Ascending triangle. So right here, basically you have a flat resistance line, and then we have a rising lower trend line support. And then basically, theoretically, the price will just bounce around in this range, and then eventually it will make a decision. It's either going to break out or break down, but more often than not, from this particular pattern, it breaks up. Okay, so yeah, if right now we are at a level of support. This is the level that we drew on the weekly time frame. This could potentially be a trade entry. So let's see, theoretically, if we entered here on the daily, a long position at the current price. Now, I'm not suggesting you do this, but I'm just kind of playing around. I would put my stop loss just below these wicks right here, and then I would target the upper resistance level. So this would make a pretty good trade. It would be a 1 to 3.74 risk reward. And if the trade works out, we're going to get 15.66%, and if we get stopped out, we're going to lose 4.18%. Now, I'm going to show you a trade in a little bit on a shorter time frame where you don't have to risk about 4 or 5%. You can have a tighter stop loss in a lower time frame. Okay, so let's actually, I wanted to show you this here. Now, we are seeing a potential sign of weakness here. So you see how we have these two equal level tops, but if you look at the oscillator is showing basically we have the high here, and then we have a lower high, and then that's also replicated on the stochastic as well. So these are starting to show signs of weakness here, but this is not considered to be a bearish divergence because this price is not higher than this one. It's just something to take note of, that the oscillators are kind of getting a little bit weaker, even though we have kind of equal tops here. Actually, no, you know what? This was a little bit, no, sorry, they're even, they're equal. But yeah, anyway, you don't have to trade based on this. What you can do is you can just kind of use a smaller time frame and just trade this pattern right here, because it is typically a bullish pattern. Obviously, if this level breaks, then the next level of support you want to look at is this upsloping level of support right here. So you can look to maybe for the price to bounce back at any point when it comes to this line. Okay, so let's go to a smaller time frame. Let's go down to the hourly and see if we have any potential trade setups. Okay, so I like to mark out the previous day high and the previous day low, because oftentimes the price will kind of work within this range for the following day, and the daily high will serve as a level of resistance and the daily low will be a level of support. So right now we're kind of in the midpoint of this range. If, let's say, the price worked its way back down to the previous day low, and I wanted to enter a long position, if I entered it right here, and then obviously I would have to put the stop loss. I have to be quite liberal with the stop loss. I have to put it below this weekly support level and below this wick right here, and then I would target the upper range. So I would target the previous day high, and that would give me almost a 1 to 3 risk reward ratio, and I would only have to risk 1.65 on that trade to potentially get 4.89%. And of course, that could be amplified with a little bit of leverage. Now, what I do when I trade, sometimes if the price is up here, as the price moves up, if I'm like, okay, I'm in a little bit of profit, I will move my stop loss higher, right? Just below here. And that way, if I end up getting stopped out, it's almost a break even. I will lose 0.16%. And as the price, say if the price comes up here, well, maybe I want to move my stop loss a little bit higher. So I move my stop loss. So let's say, I'd move it here and move my stop loss up here. So no matter what happens, I can just, have peace of mind. And no matter what happens, if the price comes back, I'm going to be stopped out, but I'm going to be stopped out in profit. And I can just gradually move my stop loss, because if this level breaks, then I could just basically move my stop loss higher. Then the trade would look like this. I move my stop loss higher, and then I can target all the way at this upper region, right? And just kind of follow my stop loss up with it. Now, this is really, I don't know, the exchange I use, this is really easy to do. I just kind of I'll have my stop loss and it'll be shown as like a horizontal line. I just click and drag it. As the price moves up, I just drag my stop loss higher. And the exchange that I use for that, it's linked in the pinned comment. So if you wanted to give it a try, I recommend. It's what I trade with. I mean, I would never recommend that you keep a lot of money on any exchange, but this particular exchange lets me use leverage, so I can get decent position sizes without having to have a lot of my coins on the exchange. But yeah, okay, so let's recap here. Overall, basically, we're just forming this ascending triangle pattern. You have this level of resistance, this level of support. If this breaks, you have this level of support. If this upsloping resistance line breaks, then the next level of support is obviously going to be down here. And then if that breaks, then you have this big level at around $4.33. I don't think it's going back down there unless we have a huge crash. Okay, so let's also, I'm going to switch back to the weekly. And I want to see how the Fibonacci retracement level lines up with the price action that we're seeing. So, I don't know why I did that. I did the wrong one. Okay, Fibonacci tool. Let's draw from the top down to the bottom. And okay, the price, it was reacting off this. So you see, normally I don't pay too much attention to this first one, this 236. The first retracement level I typically will target is the 382. And as you can see, as the price came back up, we got rejected right off the 382 and came all the way back down for nearly a retest. And then the next level we came up to was the 50%. Predictable. We had a big fight around the 50% level. And then we had a pretty big sell-off all the way down here. We went from $4.60 all the way down to $2.50. So a big drop. And then we came up, we stalled a little bit at the 618. But now the level we're at is the big one, the 786. And yeah, this is the important level to break, the 786 and this horizontal trendline resistance level. So the next one after this, the next level of resistance is obviously going to be the body close all-time high here, which is a $13.21. And of course, the price is wicked above that. But what I'm looking for confirmation of a breakout is a body candle above this level. And then what level should you target after that if we're able to break out? Well, let's say theoretically, I can only estimate because we're not there yet. But let's say if the price ended up here, right, and we broke out, we kind of came down. We ended up breaking out. I would maybe target, I'll draw this top to bottom and then kind of see some projection targets here. Oh, the 618's all the way up here at around $80. But you know what? I have other ones marked out on this. Let's see here. Retracement. If we're able to break out of here, and we're kind of in like in the clear air here, then the first level of resistance I would look to is around $32. If this level breaks, boom, I would target right here. But yeah, that's a little bit off. We're not there yet. Let's see if that's everything I wanted to mention. I think so. I think that about wraps it up. So yeah, we are in a bullish pattern at resistance, which seems to be the story with a lot of these coins right now. And yeah, just trade these ranges. Anyway, guys, I hope that helps. And if you're not subscribed and you want to get updates when I release these new videos, just subscribe now. Make sure to hit the bell, click on all, and yeah, have a good day. Bye.